Shall I open this again? Here? No? Let me see. Ah, it works. Excellent. Ladies and gentlemen, as a front office banker for more than 25 years, it's a great pleasure to welcome you from my side as well. All the guests here in the room and all the guests online, hi. I would like to lead you through corporates and markets business with a couple of slides that should ultimately show you that we still have ample growth opportunities within our core market. Now, to start with, I would like to pick up a topic that Bernd had in his presentation on lending market shares. What you see here is the distribution of our market shares in corporate lending across our 7 core markets. Except for the Czech Republic, where we are already the largest corporate lender as we speak, there is room to grow our market share further in all of those countries. Why do I start with lending? Lending remains the most important income driver through our interest income, obviously in our P&L. And lending remains the most important relationship bridge to our corporate customers. We have a situation where it's a changed version from what Bernd showed. You see the retail lending market shares here in yellow color. And you can see that in most of the markets where we're in, this share can go up further on the corporate side to match what we have on the retail side. And second, we have also, again, except for the Czech Republic, in every of those countries, other groups that are larger than us. So there is somebody to attack. And that is very important in an organic growth strategy that we have. You need to be able to go out with spirited teams, not only going after the clients, but also understanding that there is a competition to beat. The only country where this organic growth strategy has not yet worked in the last few years, as was mentioned, was Romania, where we had to delever the portfolio through the NPL cleanup. But otherwise, we already succeeded in putting the growth trajectories at work here. And I'm very confident, as Alexandra is on the risk cost, that we have an opportunity here to go further. Now, obviously, the lending side, even if it is the most important income driver and an important relationship bridge, should not be fully dependent on that only. And as was mentioned before, we would really like to grow our fee income. So let's look a little bit at the addressable market that we have in front of us. What we pulled together here is an overview, and I think you will see it better in your detailed packs, of the addressable corporate market in our segmentation definition. So if you look at all the companies with turnover above 1, 3, or 5 million, depending on the country, because we differentiate here between the countries, then you come to a total of more than 250,000 potential corporate clients for banks in that region. We are currently holding a little bit above 35,000 clients. And if we look at the aggregate wallet size, and we took estimates here from external consultants of around 13 billion, then you see that with our current operating income in corporates, as you know from our segment reports, of around 1.5 billion, we're at around 11% of that addressable market. So there is definitely a possibility by expanding our franchise here to capture more of that potential. Now, why do we put all those yellow or orange dots onto the graph? The motto we have on the corporate banking side is very much partnership and proximity. And it's very hard to capture this growth potential if you're only sitting in the capital city and travel around. You need to be really close in the region to our clients through the commercial centers, through personal contacts, and foster long-term relationships. I think that we have managed in the past quite well to achieve that. And certainly there is a possibility to take out more of that market, even without, because the question for M&A was posed frequently, to buy other companies. Now, if you want to grow a business you need to have customers that speak well about you. It is very difficult to capture additional clients if there is not a good feedback. So a very important focus of our activity is to make sure that customer satisfaction goes up. On paper, this sounds quite easy, and there's a lot of tools available. We heard on the technology side, obviously skillful bankers are important, I will speak about that. But it needs to be part of our culture to really put the focus on satisfied clients. That does not come by itself. It's continuous hard work to make sure that clients, whether they get good or declining news from us on a loan request, for example, that they feel treated well and that they have transparency on what the bank is doing. Our indices have gone up. We are not yet where we want to be in customer satisfaction, which is a certain plus because that shows that we have this growth potential. In particular, if you look at the relative score here, that's the average across our region, still trailing a little bit behind our top 3 competitors on customer satisfaction. A case here where you see how things can work out, is Farma Košichovice in the Czech Republic, where just an example of what we do in local corporate banking. With a long-term relationship, when there's the decisive corporate event, we're there to provide the relevant financing. This does not come by making a first-time offer. Only if you develop relationships, then in an important expansionary step, like in this case here, you will be able to get the deal. So partnership and proximity continue to count, but it will not be sufficient for us to grow further. In terms of expanding the business, we are working very hard to improve the front office staff on a continuous basis, both the coverage and the product bankers, and on the other side, technology. When I took over the corporate business a couple of years ago, I put in place what we call the front office credit school to improve underwriting capacity also in the front office, to get into more educated dialogues with clients about their financing needs, and to build a credit culture also across the group, because this program is open for members of the coverage and the product areas across Erste Group. So they come from all countries and develop a group credit and origination culture. Skilled bankers lead to innovation. We very much find out that we need to understand client demands very well to be able to transport that to business analysts and our colleagues in IT so they can put onto the screen the things that are really relevant for clients and cut away everything that may not be relevant. That leads us to the technology side. Simply put, we would like to have our most loved employee, George, to work for corporates as well. Yeah? This means that we want to go and rework our front ends. Over the past years, the bank has invested in several corners in the individual client solutions, but we need a joint front end across the group. And here, the touch and feel and everything that we learned with George is the most obvious choice. Getting a business to grow without onboarding clients in a very convenient way will not work. So it may sound a little bit trivial, but customer onboarding with KYC requirements and a lot of formal requirements has become very difficult, and we need to go back and make sure that the clients really feel they're welcome in an institution. Here I think we can positively surprise clients. Most of the corporate clients don't expect an easy process. If they want to join another bank, they're used to being, sort of asked, shall we say, over a couple of weeks for a lot of documents, and we want to make that process much simpler. Going further in transparency and explaining also the bank to our clients, we want to improve our rating advisory capacity. Already now for large corporates, we are doing dedicated, tailor-made advisory on how the rating situation would look like comparing with international agencies. We look at peer groups and all that, and you from the investors community will understand that quite well. But we don't explain to the broad group of local corporate clients our ratings. Yeah? We look at the ratings, we draw our conclusions, we don't share them with clients, and hence we're missing so far an important engagement opportunity where the clients would feel that the bank, is open on the understanding and also goes about, to explain what would improve the financial standing, and then tying in which would be the suitable financing products that would support such an improvement. And finally, we need to get lending online. Yeah? Here I talk strategy. This is not something that I will have tomorrow, but sooner or later, we need to have lending products online that lead in the mass market, yeah, with the smaller tickets in the corporate space, really to more self-service solutions that the bank can handle in a way more efficient manner than we are doing that now. Now, when I say we're investing in technology, obviously individual product solutions are very important, both on the physical, delivered on the physical and on the online channel. Welcome. We believe that the earnings dynamics, if you compare, the corporate universe in CE with Western Europe, shows clearly that there is more trade, more investment over the coming periods, as confirmed here by our research, so that those investments will be worthwhile, yeah, beyond all the convergence arguments that were brought already. In particular, if we look at more margin compression now on the unit of risk weights that we add to the balance sheet, transaction banking products that are shorter periods, lighter in risk weight, and add more fee income are very important for us. So most of the individual innovations that we do now, or that we bring to CE, have to do with transaction banking, and here you see a couple of examples of those. We believe there is a chance to regrow again in the acquiring business. Some of you may know that we have entered into a joint venture with Global Payments 2014, got it live 2015, initially Czech Republic, Slovakia, Romania. We rolled this out now to Austria as well, and hope to benefit from the increasing trend to online payments. Whilst interestingly, Austria, there's still a lot of cash payments going on, but this will go down in the future. Supply chain infrastructure, obviously, when it comes to financing receivables, inventory, a lot is to be made, and there's not yet so much innovation on those topics where we can capture additional business. So transaction banking overall, including also the leasing and factoring business, which has stronger growth rates than the average corporate lending dynamics, should bring us those opportunities that would help us in gaining return per risk weight that in plain vanilla lending is increasingly hard to defend. So that's it on the corporate side. Let me move over to the capital markets business. What you see here, I call the deal train. Yeah? I think it is not yet acknowledged enough publicly and by the investor community. We are a very strong arranger of capital market issuance within our core markets. We have facilitated more than 200 billion in capital market funding over the last 2.5 years with a series of transactions, and don't bother to go through all the logos, but it should just be evidence of the deal flow that we're able to generate for the issuer clients and also for our investor clients who would look at either bonds or stocks in Central Eastern Europe. Obviously, being a bank that is listed in Prague, Vienna, Prague, and Bucharest helps a lot in our credibility to get capital market mandates. We have been at the forefront of looking at a number of IPOs. There's not too many stock listings, but there's really a large number of debt capital instruments coming out, whether it's the sovereign, the FI, and the corporate space, and we are represented strongly in all of those. We've also started to look at whether we can bring simple DCM products like Schuldschein onto the blockchain to facilitate the issuance process. We've managed to do that with a very important issuer, Asfinag, here in Austria before. So we will continue to see what we can do to develop our capital market franchise. Overall, the aim is obviously to increase client-driven revenue in the market segment. Yeah? If you look at the total top-line group markets, above 500 million euros, there's a very significant portion of fee income already in there, part of which comes from the asset management side, part from the underwriting business, and we want that to grow further in line with what Bernd has explained on the quite ambitious targets on the fee side. So This is, in contrast to the corporate business, which is not divisionalized. This is a divisionalized business, but both have a lot of people on the ground. Yeah? So origination staff across all the countries where we operate, and hence deep local insight. And I dare say that there's no paper that we originate or that we sell to investors that would not work well within those that you see over the 2.5 years. Yeah? And interestingly, in particular when it comes to FI transactions, covered bond issuance, other banks are turning to us now and asking for help when they issue paper. So we have a large number of clients that use us to issue their capital market products. Now, how can this develop further? If you look at the funding mix of corporates in Central Eastern Europe, you will see that capital market funding still is a small percentage overall. Those percentages in listed shares and bonds are much higher in the EU 28, Scandinavia, definitely UK, this will not be a surprise to you. But in Central Eastern Europe, they only make up around, on average 15% or so of the funding side of the corporate's balance sheets. And here, this increasing percentage means quite a business opportunity for us because corporates will diversify their funding sources when they grow. It's a very natural development. The markets develop, and although the stock exchanges are very small, a lot of those companies look at international listings, whether it's Vienna, Frankfurt, Amsterdam, London still, where we can accompany them. Yeah? So both the origination and the sales side here is well developed, and I think that Stefan mentioned MiFID, yeah? And that MiFID has made it more difficult. No, Peter, I think was it, has made it more difficult. Clearly, the research and sales model, as you perfectly know, has come under pressure. On the other hand, we see that competitors fold. Yeah? They either sell it, go out of this business, and with the broad base we have, I think we're in a comparatively better position to build this out further. Now, if you then look at the investment side of it, one was the corporate balance sheets and where people invest into. Here is where the money is coming from. A lot of capital market funding to CE comes from outside. Yeah? If you look at local household assets, and here I do a bridge back to what Peter has explained, you see that, to explain the numbers, Austria has financial household assets of 175% of GDP, which, in a wealthy country, is quite a number. It's higher elsewhere, and it's particularly lower in most of the CE countries. And with the convergence story, financial household assets will go up. For us, that means we will be able to source more on capital market investments from the local communities in the future. And second, it's a significant opportunity for us in asset management. We are already the largest asset manager in Central Eastern Europe. We have more than 60 billion euros under management as we speak. We're a market leader with around 20% market share across those countries. And with financial household assets going up, we feel we have an opportunity to benefit in the interest of our clients, obviously, from this development. I would not underestimate the fee pressure on average, administration fees in the asset management industry that is coming. On the other hand, nearly all the products in CE are really actively managed products where you can still charge fees. And with household financial assets rising in the future, we believe that's really a worthwhile investment on the asset management side. What the colleagues have not shown you on George is we have brought online now a so-called invest manager, where you can put your asset management all through George as well. And if this is being rolled out, I think we have excellent sales tools also on the retail side to get asset management products to a broader group of people than just a few private banking clients. Now, in summing up, I think we are well positioned to continue the organic growth strategy we have within corporates and markets, clearly with a growth in lending in the future, but broadening the growth to more fee income generating products. On the market side, given the excellent track record we have in the issuance and arranging business, I think we can capture the natural growth rates that we have in capital market funding in Central Eastern Europe. And when it comes to our digital priorities, as Ara will explain in more detail in the afternoon, we are fully aligned on what we want to invest in. I've shown you some of the things in order to make sure that we reach clients through not only very good front office bankers on the physical side, but also through what I would call the George for Corporates at some point on the technology side. With that, thanks very much for your attention. And I think I hand back to Thomas now to lead us through the Q&A. Yeah, thanks.